Do you remember which Sex and the City character said they don't invest anymore because it's too volatile? Hint. It's not the one you're thinking of. Hi, I'm Zena Kumok, financial advisor, here to take the fear out of finance. In this classic Sex and the City episode, the ladies are sitting around having lunch when Miranda, the most sensible one out of the four, says that she doesn't invest anymore because it's too volatile. Here's why she might have said that. This episode of Sex and the City came out in 2003. So just a couple years after the dot-com crash. And let's not forget, Sex and the City was set in New York, which was heavily impacted by 9/11, both personally and financially. For a lot of people around during that time, investing probably felt too risky. And I don't blame Miranda. It took 6 years for the S&P 500 to recover from the events of the dot-com bust. However, volatility is not something that should stop you from investing. We can't predict what's going to happen in the stock market, but we do know that at some point it's going to go up and down. But if you look back at an 100-year chart from the S&P 500, you'll see that it has trended upward over time. Of course, past performance is no guarantee of future returns. This is why you always invest for the long haul. You can't invest if you need the money next year. You have to invest for the future. Look at investing as a long-term solution, not a short-term fix. Have any other questions about investing? Leave a comment or send me a DM.